And most important thing is we just want to get started so we can get everything as much as possible. Hopefully, we get everything covered tonight. But let's get started in our normal fashion and go over to Barbara and let Barbara get us uh, in compliance, and we'll get rolling. Are you ready for us, Barbara?
Yes, sir. Here we go. All right, here's our disclaimer for our futures and commodities trading group. Trading and investing carries a high level of risk. You could lose some or all of your investment. Trading commodities or any other financial instrument may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. We accept no liability for any losses or damages you may incur. This means that you alone are responsible for your actions in any trading or investing activities.
Awesome. Thank you, Barbara.
You're welcome.
Uh, and Dr. Mel, you up? Are you ready for us?
Yes, I am. I'm in the house.
All right, over to you.
Okay, seems like we have 2 weeks worth of quizzes we have to go over, huh?
Mm-hmm.
Because I was ready for 1 week until we said last week but I think I'm there.
Okay.
The first one. Okay, first one is which of the following are rules that we follow when it comes to trading? A, don't follow the trend. B, never use a stop loss. C, don't have a plan. D, have a system. E, go to Disney World. F, not sure. G, none of the above. H, all of the above. The question is, which of the following are the rules that we follow when it comes to trading? I see Jamal saying have a system in the chat. I see P. Brooks saying have a system in the chat. Anybody have anything different? Anybody have anything different than have a system?
Yeah, you can still go to Disney World, get the system there together.
Some of us might not be able to go to Disney World until we have a system and it makes some money.
Yes, man.
That's not everybody though. Okay. All right. So have a system wins. Very good. The next one. What position or positions can we take in the market? A, short the market. B, running back. C, on the sideline. D, long the market. E, not sure. What position or positions can we take in the market? P. Brooks says short, long. Out of the market wasn't a choice. Short the market, long the market. So your choices are short the market, running back, on the sideline, long the market, not sure.
Long and short.
Long and short. Okay.
You know what?
And then there's on the sideline and long and short. Okay, so it seems
So
that
Dr. Mel,
yeah, go for it,
on
Delvin.
this one, I think I had too much fun on this one because
No, you did.
because I want to ask everybody, how many positions can we have in the market?
3.
3? What's the 3, Paula?
In long, short, and sideways. Sorry, I'm talking channel. Sorry. You can be in, out, or on the sideline.
Oh, what?
Or is it long, short, or Ouch.
Okay, Paula done bumped her head. All right, let's let's
No, 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 no. It's
does
okay.
the right just mess you up like that?
I know.
Okay, let's read the question again. Let's reposition ourselves. What position or positions can we take in the market? A, short the market. B, running back. C, on the sideline. D, long the market. E, not sure. Okay, Paula, answer it.
Long and short.
Long and short. Based upon this, but there's one more.
Okay, hold on. Yeah,
Yeah,
I
well, the
told you,
other one is questionable
I,
because of
I
how
think
you
I had
worded
too
it.
much fun with this. Barbara, can you help us out, Barbara?
Your positions are long the market, short the market, and out of the market.
Yay.
Man, and God, all I did was just rephrase it. It's still meaning the same thing when I said on the sideline. And that's when I thought y'all might have seen Thora came in the room and tried to give y'all a hint, but she changed it up. I appreciate that though, Thora, trying to help them out. But out of the market is the other position, but it also could be called on the sideline because you're still watching on the sideline. And that's what sometimes the best position we can have, because when we waiting on something to happen or form in the market, take place in the market, we have to be on the sideline out of the market and wait till we get the formation, the confirmation, and then we get in the trade. But just know that when I say out of the sideline, it's still referring to out of the market. Same thing.
All right, I would have gotten that wrong. Who's laughing?
Oh man, yeah. I tried to switch my terminology up just to see if anybody was gonna catch it.
Well, actually, I'm not easily tricked if I know something because I put, and I qualified it. I put C on the sideline if it's slang for out of the market, as long as I qualified that. So I did put that. I'm not that easily tricked with words.
I said the same thing. I
Awesome.
said the same thing.
You went lingo on us. We got to pay attention, right?
Yeah.
Yeah, I just tried to see if I can see who's paying it on their P's and Q's. But great job.
All right, next question. What is the golden rule? A, always trade with a stop loss. B, make sure you follow the rules. C, don't risk more than 10% of your account on any particular trade. D, control your emotions. E, all of the above. F, none of the above. G, not sure. What is the golden rule? I see a C on there. Don't risk more than 10% of your account in any particular trade. I see Monique saying C also.
Do unto others as you would have
And then
them do unto you.
P. Brooks says A,
Is that the
always
stop
trade with
loss?
stop loss.
Okay.
I agree with C.
Paula says C, don't risk more than 10% of your account in any particular trade. Okay, so the golden rule is, drum roll, C, don't risk more than 10% of your account on any particular trade. But always trade with a stop loss is one of the rules. Okay, but it's not the golden rule. Very good.
Yeah.
All righty, next quiz question. There is a manual that teaches how to trade in the greatest business on the planet. The name of this amazing book is Futures and Commodities 101. If you have benefited or appreciate what you have learned by being a part of this community, could you be so kind and leave a review on one of the distributors' websites, Amazon, Barnes & Noble's, Walmart? How will the reviews help the book? A, help the book show up on the Google search engine for trading books. B, impact book sales. C, help the book get a rating, preferably 5 stars. D, not sure. E, all of the above. F, none of the above.
I'm going to say all the above.
And all the above. Okay. So all the above excluding not sure. Yes. Very good.
Very
And
good.
one more. Which of the rules did I share some of my recent personal details? A, don't be a thrill seeker. B, be patient. C, always use a stop loss. D, know your why. D, have a system. E, not sure. F, none of the above. G, all of the above. Question is, which of the rules did I share some of my recent personal details? So I wasn't on that call, so let's see.
Yeah.
Real seeker.
You had to be on the call, or you had to go back and watch the call to know this one.
I
All
think it's
the
A.
above, be patient.
I mean, you've shared different stories, but I think for that call, it was the thrill seeker. So A.
Was it the sugar trade?
Whichever
No, I
one he
shared.
went to Disney.
Oh.
No, I shared a with everybody about a lot of stuff I was going through right at the same. All this stuff was going on at the same time when we were having the retreat, and how stressed I was with all this stuff that was going on, and nobody knew I had 5, 6 things going on, and I shared that on one of the rules that we covered, and I was trying to see who was really paying attention.
Okay, well, I guess I wasn't because I think my answer's wrong.
Does anybody know which one it was?
Be patient.
What about you, Barbara? You know which one it was?
I remember you saying
Patient.
D, but I don't.
Be patient.
You were
Anybody
try-
saying be patient?
yeah, you said be patient because you were trying to hurry up and get things accomplished, and somebody said, pretty much just wait, be still. I mean, if things will fall in place. I'm rephrasing, but that's what I heard.
Okay. All these are really good answers, but the answer was know your why.
I was thinking the same thing. Know
Know
your
your why. I was basically saying how, it was so much going on, and you don't have to know why you're trading in your journey. At some point, you're gonna come across some stuff to make you question why you're even doing what you're doing. And I was going through that at that time. I even told Barbara, I don't even know if I need to keep doing this. I was so stressed. Dr. Melvin can tell you, I was exploding. I was all over the place. I had too much going on, but it was know your why. I had to remember why I was doing this. And when I remembered that I wasn't doing this for me, I'm doing this for other people. That's when I was able to get myself back together. So that was a quid I threw in there because I didn't have any more quizzes.
No, but it was good. Very good.
Yeah. Awesome. All right, so we got a lot to go over tonight, y'all. So let's jump in and see what Barbara got on these slides for us, because we went over some stuff last week on the rules, and I'm sure some of it's gonna come back up again today. The rules gonna always come back up, no matter what we're going over, y'all. So just remember that. All right, Barbara, let's talk the futures and commodities market. Let's talk about it. My favorite subject.
I'm ready when you are. What would you like to talk about?
What do you consider to be a commodity or a necessity? Now, we talk about this a lot. Even if you're new to the call, you might still have an answer. What do you consider to be a commodity? Can somebody tell me what they think a commodity is?
Product you use on a daily basis or very frequently.
Mm-hmm. What was that, Paula?
I said a product you use on a daily basis or very frequently.
Can you think of one? You probably use more than one a day. You can't think of a commodity that you think is a commodity?
Well, we drink coffee, we use sugar, we eat things that come from corn.
Well, you got 3 of them, huh? You got coffee, sugar, and corn.
Beef.
Somebody said beef. All right. Okay. Is that all we can think of?
Cocoa, water.
Gold, silver, water.
What we getting?
Wheat.
Wheat. Gold. All right. Anybody left home today?
Gas.
Gas, oil.
Absolutely. So there's so many commodities that we use on a daily basis. And the great part about it is that these commodities are here to stay here. They're not going anywhere. These are some that we use on a daily basis. As long as we're here, we're going to continue to use and consume these commodities. And they really are necessities, you know. If you think about during the COVID time, you've seen a lot of stuff shut down, but the things that didn't shut down were the essentials and the commodities because they can't. We have to have these things. And there's a whole another way to participate in these commodities, and that's what you're here to learn about. But there's a lot more we didn't name because Dr. Melvin, you trade one of these commodities that we didn't mention right now, are you?
Yes, I am.
But you talk about the cash price with it all the time. What's that commodity?
It's called cotton.
Cotton. Everybody on this call got on some clothes. And every day we gonna always use cotton. These commodities are something that you've been participating in consuming and using your whole life. But what you probably didn't know, there's a market where these commodities trade at, and you can actually participate in the market. And that's what you're gonna be learning here in the book, Futures and Commodities 101, and here on all these trainings that we do. So the regulators of the market, Johnny, talk to us, man. Take this part.
Well, because we're dealing in a security, it's regulated, highly regulated by the Commodities Futures Trading Commission, the CFTC. All right, they set the rules and they enforce and they enforce the rules. So it's highly regulated.
That's the website, right? CFTC.gov.
Yes. And we encourage y'all to go look at that site and see what all's there. And I think you can learn quite a bit.
Absolutely. The exchanges. What are some purposes of the exchanges? So where do these commodities trade at? We say that there's a market where these futures commodities trade at, but we don't know where they trade. Do they trade, you know, in New York? Or what? So I need y'all to understand that when we open our accounts to trade, we're not opening our account with an exchange. We're gonna open our account with a brokerage firm that is licensed to buy and sell these commodities on these exchanges. And the purpose of the exchange is for the like Johnny just said, it's a very highly regulated market, and these exchanges are only places where you can buy and sell these futures contracts. Now, things have changed when it comes to these exchanges over the years. It used to be, you know, outcry trading in the pit when it came to futures, but now it's pretty much all electronic. They still have some outcry trading in the stock market, but in the futures market, it's pretty much all digital, electronic now. But we have different exchanges where these commodities trade at. You know, you'll see that some of them that we talk about are in Chicago. 2 exchanges that are in Chicago, and they are merged together and owned by one entity, the CME, Chicago Mercantile Exchange, owns both of them. But that one in Chicago, that's called the Chicago Mercantile Exchange, is the largest futures exchange in the world, not just in the U.S., in the world. Our futures are traded all over the world, not just in the U.S. But the purpose of having these exchanges, we have to have, like Johnny mentioned, security markets that trade. We have to have a regulated exchange where we can have these markets, have these commodities trading on. And I can get into it, but that's why when you look at the contract specifications, And if you don't know what that is, you will. We will get into that, but that tells you everything about the contract. You'll see that there are different trading hours, and that's because the some of these groupings are trading in different areas. For example, the grains and livestock trade in Chicago at the CME and the Chicago Board of Trade. CME stands for Chicago Mercantile Exchange. And you'll see that they trade, and you'll see it's trading on central hours when you look at the trading hours. And then you look at the energies and the metals, and they'll have a different trading hour when they open and close because they're trading in New York on the exchange. That's the COMEX exchange. And that's why you had a different trading hour. That Johnny mentioned the ICE, International Continental Exchange, that trades in New York, but the hours are so different from any of the other ones that I just mentioned because it's trading off of London hours. That's why Johnny mentioned that it's international. It's trading off the London hours, even though it trades in New York. So if you go look at the specification, you'll see these markets will open in the middle of the night when we're sleeping because it's later in the morning over in London. So just something to keep in mind about the exchanges. But like I said, your account won't be on the exchange. Your account will be with a brokerage firm that's licensed to buy and sell futures contracts on these exchanges. But it's still good to know about them. I've had the opportunity to do a tour on that Chicago Board of Trade Exchange and the Chicago Mercantile Exchange. Actually stood in the corn pit and the soybean pit while they were actually live trading. But these exchanges is something that's been around for a very, very long time. And like I said, the CME is the biggest one, largest one in the world. So anything you wanted to mention on the exchanges, Dr. Melva, Johnny, before we move on?
No, I'm good.
Okay, great.
If I remember correctly, when you do register with the brokerage firm, it asks you what exchanges you plan on trading on. If I
That's right,
remember
Johnny.
correctly.
Yeah, you're absolutely right.
Specifically, if you're going to trade ICE.
That's right. Now, to my
And
knowledge,
and you're correct too. And each broker house is different because I know with the one that I'm on, each section that you want to trade, if you want to trade COMEX, ICE, you have to specify that in your contract with them, and it's a specific cost in addition to trade, you know what I'm saying, the different ones. So that's, yeah. So you're right, Mr. Johnny, about that. Each broker is a little bit different.
nice. Awesome. All right, Barbara. Great. Johnny, Dr. Melvin, either one of y'all want this one or you want me to handle it?
You're doing an excellent job.
All right. What does a bull market mean? How many times have you heard it's a bull market? The market's is in a bull market right now. The bull market means that the attitude of the market is trading up.
Yeah.
The bull market means that the market is in a up direction. You'll also hear it being referred to as bullish. The market is bullish, but the bull market is referring to the fact that the market attitude is in an up direction. All right. One thing about the matter of fact, let me say this too. One thing about the the bull market is the bull market seems to have favoritism when it comes to the different attitudes of the bull and the other one that we'll get into. But the bull market seems to have favoritism amongst the society, I guess I would say. Please mute your phone if you or your computer if you haven't. But the reason I say that because it's it's portrayed to be positive or good when the market is in a bull market, and is looked at as a bad or negative thing when the market's in the opposite of the bull market that we'll talk about here in a minute. But it seems like the attitude of being bull is what seems to be the favorite of the two. And that's only because of education, all right? But there's really no favorite between the bull or the other one, but a lot of people look at it that way. And what does a bear market mean? The bear market basically is meaning that the attitude of the market is trading down. It's in a down trend. A bear market means that the market is bearish. You'll hear it referred to. Trading in a down direction is the bear market. That's what I was referring to. The bull seems to be more favored of the two. But the thing is, at all times when the market's trading, the bull and the bear are constantly fighting and competing for control of the market. Sometimes the bull wins, sometimes the bear wins, but they're always competing and fighting for control of the market. And one thing about it, once you get in the market, you'll realize that whether you're a bull or a bear, somebody's trying to take your money. And if you're a bull, that bear is trying to take your money. And if you're a bear in the market, the bull is trying to take your money. But just know that a bull market and a bear market is basically letting you know the attitude of the market, whether it's in an up direction or in a down direction. All right? Oh, Johnny loves this part, so I'll give it to you, Johnny. He actually does this.
Yeah,
Over to you.
who's in the marketplace? One is the hedger, or two of them are hedgers. One is the producer, and one is the commercials. Now, I get a kick out of the way they talked about some of this. So let's say I'm a farmer and I borrow the money from the bank for the seed so I can plant the corn. Oftentimes, depending on the market, the banker may require me to hedge my position to lock in a profitable price so the banker is assured that he gets his money. Okay? Now, the same as in other commodities. I raise cattle. The price of cattle is really high, higher than it's been. I may want to go ahead and lock in my profit now by selling my cattle on the futures market, right? Or sell a contract for delivery, right? The commercial buyer may say, and it was explained in that video, that, wow, the prices are really low right now. I want to go ahead and lock in a price for delivery next fall or on a specific month. So I'm trying to hedge my position, right? Or if I was a commercial producer, and let's say the price is really, really high right now, you know, I may go ahead and sell some contracts, hoping I can buy it back in before the month that I need it. So that's called hedging your positions.
Yeah, Johnny, it's always good for you to talk about that, man, because you actually live it and do it. As you said, being a cattle um herder, with prices of cattle being high, um, from a
Okay,
cattle herder standpoint, would you like would you like to see prices go down, Johnny?
Not really, but
Right?
here's the crazy part about it. And this is what's good about the commodity market. It is spring, or excuse me, early spring, and my cows have just had calves. They're too young to go to market. But the price is really, really high right now. What happens if I wait until they get to weight in November and the price has fallen? Then if it falls below my profit center, then I'm screwed. So since I know how many calves I got on the ground, I can sell those feeder calves now for delivery in November.
Awesome. So we watched the video and they gave an illustration of what Johnny's talking about, and what I'll ask Johnny this because Johnny's an actual real live illustration of what they just talked about in that video, because of the fact that he had cattle, and cattle just recently traded up to all-time highs it's ever been, ever. And, prices come down a little bit, but it's still up real high. So it was a good example of what they just talked about when they was giving the illustration with the farmer and the producer. Awesome. Thank you, Johnny. Keep on. You take this one too, my friend.
Okay, so we know the price, according to that video, fluctuates during the year. Goes up, goes down, goes up, goes down, goes up, goes down. If I think it's going to go down and I want to lock in my price now, well, there's somebody out there that says, I don't know what I'm talking about. I think it's still going to go higher. So I'm going to speculate. I'm going to buy that contract you're selling because I think it's going to go higher. And then somebody else says, no, Johnny's right. I'm going to sell a contract too. So we got people on either side, either buying or selling, speculating that the price is going to fluctuate up or down in the future. There are small speculators and there are large speculators. Who are the large speculators? Those are the money manager people. Those are the people that are managing, hundreds of millions of dollars of other clients' money. okay? And their whole purpose is trying to make money off that money. So they're going to speculate in the commodities market to see if they can make money. The small speculator, who's people like us, are going to do the same thing on a smaller scale. Okay? Where they may be buying hundreds of contracts, we may be buying one or two. Delvin, out of this group, who do you think is the most important?
Well, these are some very important groups here. All of them very important, Johnny. But the one that's most important is the small speculators. You and I, those of us who are on this call, we are the most important out of all these different groups that's here on the screen. Just know that we are the most important.
Why would that be?
Very important question. The reason that we are the most important is this. I need y'all to realize something. The market works only if we can get in it and get out. If we can't get in and get out of our trades, the market doesn't work. And none of these things really matter. But you need to know this. It works because of us. We are the ones who make the market work. There are more small speculators than there are large speculators, and there are hedge fund, market makers, producers, commercials. The one that has the most power in the market is the small speculators because there are more of us. And there's always somebody willing to buy what you're willing to sell. And there's always somebody selling what you want to buy. And that's what makes it work. Johnny, we are the most important because we make it where we can get in and out, my friend.
What's the next slide there, Barbara? And that was what Delvin just explained. We add liquidity. The more buyers in the market, all right, the more people wanting to buy a contract gives us the ability to get out. Or the more people wanting to sell gives us the ability to buy. So the more buyers and sellers that are in the market, the more the liquidity.
Yes.
Right? And so what we often do when we look and evaluate contracts is to what the open interest is, or how many contracts are being traded on a daily basis. All right? And it's an important factor when you decide to get into a trade. The more liquidity, the easier it is to get in and out of a trade. All right? So we'll get back to you on this bull and bear again.
Right. So the technical and fundamental trader can be what we call long the market. That means that positions that we just got through talking about on our quiz, right? So when we take a position in the market, it doesn't matter if we take that position based on technical information or fundamental information. If we take a position and our order is filled and we're trading the market to the upside, meaning that bull market that we talked about, that position is what's considered to be long the market. All right? Now, we take a position and our order is filled and we feel and we're trading the market to the downside. That's referring to that bear market. Our position in the market is considered to be what's called short the market. That means we're bearish in the market. And if we take a position of staying out because we don't have everything that we need to make our decision, we're still waiting, whether that's technical or fundamental, for things to take place, come together, we can be what's considered to be out of the market. That means we don't have a position. We're still, you may see me post a chart and say that I'm still watching, keep watching. That means I'm not in the market, I'm watching, I'm on the sideline, waiting for things to take place. And the same thing could be from a fundamental trader. So long the market, short the market, out of the market.
Hey, so Barbara, you might add long the market is we buy the market. Short the market is we sell the market. And out of the market means we hadn't picked up the phone yet.
Nice.
That's good.
Yes. Awesome. Well, I want to let you know, Barbara, that I think those videos was outstanding when it comes to explanation and the illustration that they gave to make sure that it made it clearer, and you got a chance to hear it and get a different perspective from hearing it from, from Barbara or me or Dr. Mel or Johnny V, because like Johnny said, it really just validate what we've been saying to you, but it was good to hear it from a different person, from a different perspective. And I love the pictures and the animation, because it really made it give that visual. So thank you for that, Barbara. What'd you say, Jamal?
I said it was it made something that could be assumed to be like really complex, really layman terms type. You know what I mean? Because people adjust the animation. If you come too thick, they'll miss it. But the animation, like for my brain, the animation was right on time. I was like, yeah, this is Sesame Street. I can get with this. Yeah, absolutely. So for some people, that those type of videos are awesome. It makes what seems to be hard made a little bit more simple. To me, that was my take on it. Excellent job, Ms. Barbara. Thank you.
Yeah, yes.
And Mr. Johnny, I really enjoyed your explanations, and I'm sure you've done it in the past, but it really hit home, when you explained that sometimes the producer has to go to the bank. I understood that from a business perspective, and so they've got to show the bank that they're going to get repaid. And so they've got to, sell contracts, pretty much to get a loan to say to the bank, okay, I have someone that's going to buy this where you can get repaid. I've never seen it like that before until you explained that tonight. So there's so many reasons why people buy and sell contracts, in the futures and commodities, marketplace. And you just gave us a different perspective tonight from the business mindset of a producer. And I really appreciate you doing that. Thank you.
Can I say one more thing too? It just hit me, like, for Mr. Johnny, I did not know, like, I didn't know your resume. So like this is what I saw, like, as a living person who is breeding cattle. I think that's what you're doing. You're producing. Man, you should be signing that manual, brother. You know what I'm saying? Like for real. Like, I did not know that. I did not know that. I knew that when you explained it, it was in depth, but you are one of the people inside of the class who's doing what we're talking about in the physical form. So like, you're getting your hands dirty, bro. I don't know nothing about messing with chickens and messing with cattle. My family down south had pigs and all that stuff. But to hear and learn what I'm learning now, and to know that I could have been in the middle of my family moving and shipping pigs over this. I had no clue. But to hear you say that you drop calves, I'm sorry, is the calf what you or whatever the how do you call them? How do you call the baby?
Yeah, calf.
Calves. All right. That was amazing. When I heard that, it hit me on a whole nother level. It's like, man, yo, this man is doing it. He can go wherever and get his hands dirty, and he's a producer. And that's crazy to have a producer in the class. A producer in the class. The people we're learning about is in the class. Thank you, sir.
You're very welcome.
Awesome. And the floor is open, guys. This is where we want to get our questions answered. We got any comments or about what we had talked about tonight, covered tonight, or anything that you need to get clarity on. This is time to ask your questions and get them answered. Because I know you got some, even though we had a great call with good clarity, you still got questions. So ask away so we can make sure you're clear before you get off the call. And I also want to say, I don't know if everybody knows we have a Telegram group, and if everybody's on the call, it's in the Telegram group. But if you're not, I want to invite you to our Telegram community where we share these quizzes that we went over at and post charts and post trades. If you're not in that group, I want to invite you in the Telegram group.
Question. All right, so do you have to be physically taken or being instrumental in the class in order to be inside the Telegram group?
So do you have to be what now?
Like, do you have to be taking a 10-week course? Somebody might be curious, and I give them the link or whatever the case may be. Can they come into the group, or they have to be inside of a 10-week course of some sort?
Well, now's the time to get in the group if they want to join the group. This is a great time to get in the group. And
okay.
There's no the time than that is now if you want to.
Okay, all right,
join the group. All right, so anybody got any questions or comments? Because I can feel y'all out there.
I have a comment.
Talk to me, Paula.
So what Dr. Melba said, that resonated with me as well, regarding the bank loan side of it. I like to watch Shark Tank. And so there are people sometimes who come in and they have a product, they haven't made any sales, and, it's kind of like a negative thing. So, doing, I guess, future selling and then going to the bank and having something to present to say, well, this is my security then for getting this loan, like that kind of makes it clear for me as well. So thank you. And I do like the format of the presentation this evening, actually, with all the videos.
Yeah, thank you, Paula.
You're welcome.
Thank you.
Does everyone understand liquidity? Because liquidity is really important, because as we go on and learn a little bit more depth, liquidity is important to understand. So for those of you that may be on for the first go round in the class or second, do you understand liquidity? Okay. So I'm not getting anyone to say yes or nay. So
yes, I do. And Dr. Melba, can you tell me if like liquidity, if you just take the ITY off, it's liquid. So you're making your cash liquid. You know what I'm saying? Like you're making it available to you in your Cash App or Zelle.
well, that's a nice way of looking at it, but from the perspective of you're buying and selling contracts, and
Yes,
it's a trade that you're getting yourself into when you buy and sell a contract, and you have to be able, if you sell a contract, you have to be able to buy to get out of the contract. If you buy a contract, you have to be able to sell to get out of a contract. And you need people in the marketplace doing the same thing that you're doing in
Mhm.
order for you to get in or out of a contract. And
Mhm.
that's the basis of liquidity.
Okay.
Because it makes no sense for you to get in a trade and you can't get out, because if you can't get out, you can't secure your profits.
Right.
And so
Okay.
liquidity is important to be able to get in or out of a contract based upon whether you're buying or selling. And having numbers of people, massive amounts of numbers of people doing the same thing that you're doing gives greater liquidity, meaning it makes it easier for you to get in and out of the marketplace and to make profits.
Okay.
Okay?
Thank you.
Awesome.
Also, too, Dr. Mel, well, I guess I'm gonna need you really to speak on that, Barbara. But to my understanding, I think we have some training coming up with liquidity being more depth in this thing. Am I right, Barbara?
Yes, we do. In another lesson, we're going to go in a lot more depth about liquidity.
Yeah. So we're gonna get more into it, Dr. Mel. They don't want to tell you whether they can get it or not, but we got more liquidity coming.
I know we do.
So
I'm just troubling the water a little bit.
yeah.
You're just stirring the water up.
Yeah. So I normally say I hope y'all, but I know y'all got value out of it tonight. I know you received value out of this call tonight. 'Cause I know I did. And
Sir.
if we don't have any more questions or comments, we're gonna end it right here because we're a little over. But we didn't go that bad. We went over a little bit, but I want y'all to keep your eye out on the group for the quizzes as usual. And if you get time, go back and watch this video whenever Barbara gets it up. Because I think those little videos in there that giving us those animation and illustration are worth watching again. So if you get a chance to watch them, watch them. So if we have nothing else, that's it. We'll end it right here. And everybody have a good night.
Farewell, everyone. Have an awesome and powerful rest of their day.